Welcome, everyone. I am thrilled to be hosting today's session with Sakar on Make Your Taxes and Accounting Less Taxing, as well as a little preview with some Q&A time for our new tax and accounting pod. So for those of you who are joining, you'll have first dibs on the only 15 seats that we're offering in this pilot program to get some support on your taxes and accounting ongoing. I can also say from personal experience, since connecting with Sakar through Consultants for Good, he's now my accountant and is helping with a lot of these things. So it is underselling it to say that I trust and recommend him, especially given his background in nonprofit, his deep understanding of both accountants, of accounting, the mission-driven sector of working with nonprofit consultants. So he really deeply understands this space in a way that I haven't experienced in working with other accountants who really aren't quite sure what nonprofit consultants do.
Great. Thank you, Lauren.
I want to kick us off with our land acknowledgement. So if you would like to, you can put your feet flat on the floor. Feel free to close your eyes, touch something that might connect you to the space that you are in. I acknowledge the Ute, Arapaho, and Oceti-Sakowin peoples, the past, present, and rightful stewards of the land we have the privilege and honor to reside, recreate, grow, and live upon. We commit to doing the individual and collective work it takes to dismantle systems of colonization. Please take a moment to honor the original peoples of your place. Thank you. I have a few other announcements that I'd like to share. I know that we shared these at last week's session as well, but since today's session is open beyond just our normal C4G membership of consultants, I wanted to share a few updates. First, on our health and benefits pilot program. For this program, we have 4 different partners. These are continuing to change as I get feedback. We've already kind of dismissed 2 potential partnerships based on their responsiveness and their pricing and complicated processes not being in alignment with our consultant members. But these are options that are all available to both consultants and small nonprofits. So regardless of your business structure, several of these are some different options. And we're always looking for feedback on these, essentially trying to compile and bring together people like we have one partner who operates somewhat like a broker, but has more flexibility to create plans that you wouldn't otherwise be able to access, some direct insurance providers, and then some unique different kinds of plans depending on your needs. So still looking for input on those. If you filled out the form before when we were just working with Dr. Noor and Affinity, we do have 3 additional partners. So fill that out again, connect with them, and see if any of those options are a better fit for you. I also want to share some updates on Consultant Match Lab. So these are 3 programs to help nonprofits find consultants in a way that should significantly reduce your unpaid time and labor creating proposals, building networks, relying on referral partnerships that you've had to spend a lot of time building. Consultants for Good is kind of acting as that referral partner to save you a lot of time. We're also designing, especially the direct match program, to be really transparent. So you know how many other consultants are in the running. You know there's nobody who's pre-selected. We ask nonprofits for a deposit up front to make sure that they're actually serious about hiring a consultant at this time and through this process. And then as much as I receive feedback, we'll share feedback with you that I've received from the client or things that I've noticed as well. So hopefully to make that process a whole lot less stressful, reduce the time you're spending on business development, and create some clarity and equity in those processes. And I should have had this slide up to share about the 3 programs earlier, but we still have Easy Match where opportunities get sent to you directly. Often these are proposals. These are ones where you're still following up on your own. But often these are posted by our about 400 nonprofit members within Consultants for Good. Direct Match, which I just shared, which is more one-on-one matching, and scoping support. So if you're talking to a nonprofit that needs fundraising support, but can't tell you what that means or what their budget looks like, we'll support them through creating that scope. And we'll be bringing in C4G members to help with that scoping based on subject area where that makes sense. So for all of these, keep your profile updated. That's how we're finding who we can connect. The more information, the better. So right now we're in the middle of matching a youth curriculum creation project. So if that's you and you didn't get an email from me, double check that your profile is updated and make sure that's up to date for the future projects that we're partnering with as well. A quick update on Easy Match. The language has changed a little bit. And note that Prozil is no longer offering their RFP marketplace. They've stopped sharing RFPs. So if you have other sources that you'd like us to pull from, please share those with me. But any of the Prozil leads that are on there, they should all be closed at this point, but you won't be able to access those anymore. And that also means that all of the leads that you see should be coming directly from organizations sharing them with C4G specifically. We have already had one successful match through the direct match program. So again, just make sure that your profiles are updated. The first process took participants about an hour of their time total to go through the process, receive feedback, and not have to create a proposal, especially given that it was a much smaller project. I also want to share that we're hosting an event on February 18th to help both consultants and nonprofits navigate what do we do during the Trump administration. I know that several executive orders have already looked like they're going to threaten nonprofits and obviously are already threatening trans folks, immigrant communities, and others. So not so much to share resources that C4G has collected, but talk as a community. How do we come together? Where are we finding resources? And what actions folks are looking to take, both for their own businesses and for the nonprofit clients that you're supporting. As we get into today's discussion, there will be opportunities to share in the chat, to ask questions. So a few reminders, human firsting, take care of yourself. You're a human showing up here before you're showing up in a professional capacity. So take what you need. We love to see your cameras on. That's a lot more fun for, as a presenter, to see who's participating. If you can't do it, that's just fine. Share courageously, but listen generously. Make space and take space. If you're somebody who usually speaks up a lot or somebody who doesn't, consider how you might participate more fully and make space for others to participate. Stories stay, learnings leave. If anyone shares anything that's more personal or private, don't attribute that to them or share any details, but please do share the learnings. We're here to learn, connect, and support, not to sell, and assume best intentions, but will intend to impact if anything does come up. So with that, I am excited to pass things over to today's presenter, Sakar, as we talk about how to make accounting and taxes less taxing.
Okay, great. So I'm gonna share my screen. Yeah. So I have to, I don't use Zoom, hold on, so you gotta give me a minute while I fumble around and figure out what to do. Here we go. So I have two sort of decks that are ready. One is I just want to talk through, some basics of like how to keep your records straight, things like that. And then I also have a much larger deck where, I have all kinds of things around specific taxes, specific deductions. But like, as you can see, this is a 3-hour presentation and I don't want to go through all of it. So this is where, I'm not trying to like get you to understand the whole tax code. So that's where it's very useful for you guys to ask questions if something is on your mind. But today it sounds like it's a lot of people who actually already have quite a bit of experience. So let me run through with the entities they're working on. So let me run through some big picture ideas, and then I would love for the presentation to be directed much more by the questions you have. Yeah. So okay, so what's the basic, right? The basics are that you need to keep good records, right? And one of the characteristics of good records, obviously, is that they're complete, that you're able to understand and track them down later. But also, generally, the IRS likes things to be contemporaneous, which means that your records should be kept as close to the event as possible, right? There are specific cases where certain kinds of deductions were denied because the record keeping was sort of retroactive. You went and did it at the end of the year or things like that, right? So where does this matter? This matters oftentimes quite a bit in vehicle records. So if you're driving for work and you're taking mileage deductions, that's a place to do it. It can matter in situations like travel, where maybe you have a mix of business and personal travel, and so documenting that rapidly is useful, right? Many of you are S corps, so this, if you're not doing this in S corp, you're in trouble. But if you're LLC, I find it very useful to separate business and personal accounts completely, even if as a LLC, even if it remains in your name. One place I frequently see this getting a little back and forth. Like I see it getting a little messed up. Is people want the miles or want the cash back, and it's a personal card, and they want to put things on there, right? So one of the things I advise, if you can get a separate card, obviously that's perfect. But one of the other things I advise folks is that just set up a reimbursement plan for yourself. So at the end of every month, if you have to do a reimbursement from the business to your personal, then it just like imposes a certain discipline on you, right? If you're S corp, you should be doing reimbursements. That's actually required, right? If you have any kind of personal expenses you're doing for a business. Um, I always encourage reconciling with your bank statements, and that just means making sure that all your amounts tally between, what's spending, what's coming in cash, and all of that, right? It keeps you honest. If you're spotting errors that are in a time frame of 1 month, they're a lot more manageable than if you're spotting errors that are in the time frame of a year. Going back through all of that is very difficult. And the last thing I would say is part of the basics is that classify all your transactions according to the tax form that you ultimately need to fill out, right? So if you're LLC, you're going to fill out a Schedule C, right? If you have a rental property, you're going to fill out a Schedule E. So just all the transactions that are coming through, if you just look at the tax code, I mean, at the tax form that you need to complete, and you say, okay, this transaction is an advertising cost for my business, right? It really does simplify your life quite a bit at the end of the year. Um, Going through where can you keep your books? I mean, it's all over the place. I often see people who open QuickBooks accounts because it's the thing that most people know about, and then by the time they get to us, it's been unused. They've just paid for QuickBooks for 6 months or 7 months or 8 months or whatever, right? So it's not necessary. You can do it in an Excel sheet, a Google sheet. There are templates online. We have templates that we've shared freely with the C4G community. If you're LLC or even if you're S corp, right? If you want to go one level more automated, there are these kinds of tools like Tiller HQ that pull your bank transactions and put them into a Google Sheet. And then you can go in and classify them, right? Or categorize them. They're budgeting softwares that are really intended for personal use, like Monarch or Quicken or things like that. But if your business and your personal is not super well split, then these things can be quite useful because they're actually quite easy to use, right? They're not as complicated as, say, Wave or FreshBooks. They're not designed in the same way because they're personal budgeting tools, but you can get pretty far with them if you're doing your own books. And then, of course, there are the small and medium business accounting softwares like QuickBooks, FreshBooks, Xero. There's a whole range of them that you can use, right? Um, and there's some questions popping up. I'm not sure how to monitor. Oh, you really like Wave. Okay, great. Um, yeah. I don't know what's the right way to do this. Do you jump in if there's a question that I should answer, Lauren?
Yep, I'll do that. I'll keep an eye out. Do you want me to jump in when there's comments too, or just those?
If they're adding something, that would be wonderful. Yeah.
Cool.
Right.
Happy to do that.
Um,
And folks, feel free to use the little raise hand feature or
yeah,
come off mute if you've got something that's easier to say out loud too.
yeah, please. Great. Um, yeah, so oftentimes, like, again, I think this might be a bit basic, but where do the transactions occur? So like, you know, things are usually happening in your bank account, your Venmo, cash. I mean, I don't suggest to use cash. It just makes everything complicated in terms of tracking, but sometimes you have to, right? And then what is the category that you need to assign to a transaction? And so this is oftentimes the foundation, right? This is the key thing. So, we call it a chart of accounts or whatever. But this, if you get this right, like I said, I usually suggest for small service-based providers like the nonprofit consultants in C4G, I often suggest just categorize it directly to a tax form, because that's really the key thing that you're worried about, right? At the end of the year, you've got to file your taxes, and when you start to budget and things like that, you can also budget under that, right? Like you can have a budgeting category called advertising, and you can have subcategories under that, right? So if you're budgeting the way you have to fill out your taxes, all of that starts to align. It just makes it a bit easier for you. Yeah. Where do you store and collect receipts? Yeah, like you can keep them on emails, you can put them on Google Drives, you can, if you're using something like Wave or QuickBooks, then you can attach it to there. There's any number of ways to do that, right? Um, so, but I think that's very important to do in case you're ever asked to substantiate something, right? And oftentimes the thing that I find people miss the most is hard receipts, like if you go have a coffee somewhere or something like that. And so one of the things I suggest is the moment you have a receipt generated for you in a store, like let's say you went and bought supplies, you didn't buy it online, you didn't get a digital one, is just take a photo of it immediately and send it to whatever organizing tool you use. If it's not QuickBooks or Wave or something, just like send it to your email with a very specific kind of tag, right? Supplies, January 23rd, 2025. And then, it's just sitting there for when you need it, right? Cool. Um, quickly, what are some standard expenses and deductions for service-based businesses, right? So one important thing here is if this is sort of a very key phrasing, right? Anything that is ordinary and necessary to run your business is probably expensible, right? So what are the obvious things that come under this? Advertising, software, fees you have to pay other professionals, professional development that you have to engage in. Any other ideas that are probably ordinary and necessary? All right. I feel like a classroom teacher, like
We have one in
just
the chat. We've got internet. We have
sorry, what was
internet in the chat. We have
yeah,
internet.
exactly. Communication. Yeah, communication costs, right? That's a very ordinary and necessary in your line of business, right? So then let's look at a few other things, right? So there's the home office deduction. How many people, maybe, I don't know, raise hands, whatever. How many people have a home office or have that set up? Yeah, okay, great. Yeah, I would imagine most people in our groups have a home office set up, right? And then um, you can take a deduction for that. So there's some rules around what counts as a home office, and I can share those in a minute if there is interest, right? And then vehicle use is another one, right? So generally in with nonprofit consultants, with C4G folks, we're looking at business use of a personal vehicle. We usually not looking at it the other way around, right? Because your business could own a vehicle too, but usually it's a vehicle you own and you use for business, right? So one important thing here is that you're not allowed to uh, deduct commuting miles, right? So if you're commuting from your house to an office, your house to a client, then technically you're not permitted to deduct those miles. However, if you have a home office, that changes things because now you're commuting from a home office to a client or from a home office to your other office, which is a co-working space. Yeah. So this is one of the reasons we definitely suggest that you set up a home office if that's viable and possible for you. It does open this up. The other important thing here is that the standard mileage, which most people take, doesn't include things like tolls and parking, right? And that can add up, and particularly if you're in a high tax bracket, if you're paying 25-30% effective tax, then every dollar you save is actually pretty nice, right? Yeah. Um, Folks who have S corps, so C corps, are you doing this? Are you doing the profit sharing retirement contribution? Yes, no, maybe. Let me look at the chat. Um, Haha, retirement. I see. Okay, great. I'm never retiring. Is that a thing? Okay, so Peter hasn't. Good. Yeah, so generally, I mean, even if so if you're S corp, so if you work for a regular employer, one of the things that would happen is that you would put your retirement savings in, and then your employer would match it, right? If you have a half decent employer. So in this case, the S corp is your employer, right? So the S corp can match, not exactly match, but there are certain rules where the S corp can also contribute to your retirement fund, right? And so then this contribution is actually deductible for your business, right? So you're banking your $23,000 max for the last year, and then your business is putting a little bit on top of that. And that's also deductible. And so for people who are looking to be a bit more aggressive with their retirement savings, then this is a nice little tool to reduce taxes, to increase things. One important thing to note here, and I saw that I think Peter said he didn't know about this. So if this is something you set up for 2025, then there are some startup credits. So you can claim some tax credits in the year that you actually set up a retirement program for yourself, right? And tax credits are nice because unlike deductions, they're dollar for dollar reduction on the taxes you owe, right? So like a $500 deduction, doesn't add up to $500 of savings in taxes, right? It's actually quite a bit less than that. But a $500 credit does add up to $500 of savings in your taxes. Yeah. Business travel is one that we frequently get questions from with C4G folks. You know, what happens if I go to Miami for a conference and I spend 2 extra days on the beach, right? Is everything deductible? Is nothing deductible? Things like that, right? And then, of course, there's the qualified business income deduction, which, most tax softwares, even if you're self-filing, will allow you to take. There are some income thresholds here that are worth considering. Yeah, great.
A couple questions
Um,
about profit
yeah,
sharing and who it applies to.
yeah,
Um, so first, does profit sharing retirement contribution apply if you're an LLC that's taxed as an S corp?
yes.
And is that true for C corps too?
Um, if you are a oof, C corps are you a single owner C corp?
I'm seeing a
Yeah,
nod from Melody.
yeah.
Yep.
Yeah, if you're a single owner C corp, then many of the things that apply, things around this will apply to you. Yeah.
Great.
Um, so yeah, so the solo 401k or the individual 401k is quite a powerful tool. If you are of the mindset to have tax deferred income, then there's quite a bit that you can do with it. There's quite a bit of money you can bank tax deferred, right? Which means you don't pay taxes on it today, but you will pay taxes on it when you pull it out in your retirement. Yeah. Was that the only question, Lauren, or were there other questions?
There was one more. What happens if you don't get a receipt with tap and go payments? This is becoming more common. So, for example, tapping a card at a parking meter when you don't get a receipt.
Yeah, your bank statement is also generally considered sufficient proof, right? So if you have a credit card statement or a bank statement, that's usually considered sufficient proof. And that should be fine. And if you're just tapping at a parking meter, it's probably not even really material, right? I mean, you're probably paying $1 or $2 or something. So um, that should be fine. But if it's a much bigger purchase, then then you know you may want to think about how you save that receipt somewhere, or save that statement somewhere, or indicate which statement that purchase was on. Yeah.
One more question. Although San Francisco parking is more like $10 is what we're hearing. When we travel for work, but add on personal, where should we draw the line with deductions?
Yeah, so this is an interesting one. I think I have a, so may I get to that in just a minute, right? I just want to walk through everything. And then there's some common personal deductions and credits, right? So one common one is child and dependent. One thing we frequently find is that folks who are eligible for the head of household filing status don't take advantage of it. So if you have a dependent, which could be, obviously a child, let's say at the moment you're filing single, this is when this would apply, right? But let's say you have a older parent that lives with you, or you have a child that lives with you, then you become eligible for the head of household filing status. There are a few more rules around it. But if you become eligible for this, then everything like your standard deduction is a bit higher. There's a whole bunch of benefits that come with this status, right? And this is one thing we find that people frequently miss, right? Um, Obviously, people who do professional work are frequently investing in themselves. If you go to a qualified higher education institution to get, say, a new certification, or to do some kind of, even non-degree courses, then you do have the lifetime learning credit that you can take advantage of, right? Hopefully all of you have paid down your student loans, but that is one of those things where you can take a deduction. If you itemize, there are a whole bunch of options, right? Um, Let me just show you with the travel stuff, right? So maybe I can really quickly, are there more questions, Lauren? Or
We just got one about the back to school. So, what about going back to school to get a degree that is essential to providing services in the field?
right. So there are some there's some rules around earning a degree that I can share. Certain kinds of degrees cannot be covered. Certain kinds of earning of degrees cannot be covered as a deductible business cost, but certain kinds of further education can be. And this is something I can, if you're interested, please drop me a line. I can send you something on this. And this is a good transition to how I'm hoping, TAP will work, right? One of the things that I found once I joined C4G is that there are lots of people in here who, run small practices and do their own books and accounting. And oftentimes they don't have very complicated questions that really need, say, a accountant to really do a lot of research and figure out like how does that apply to you personally. Oftentimes it is questions like the ones you asked, where do I draw the line on business travel? Where do I, right? And so what I'm seeing is that is there a way to, is there a way to support these kinds of questions and provide people um, some sort of researched, curated answers where you're not just Googling things, but you're going, okay, someone has said that, someone who knows has said that this piece of information is accurate and I can base my decisions on this, right? Like yesterday, I got a question from someone who was hoping to attend this session. I don't know if she's here, but asking me if she could deduct business expenses um, for do a business deduction for a nanny, for someone to take care of a kid during work hours, right? Um, this is something we've been looking into. We don't have a clear answer as yet, but what we found is that there are a bunch of blogs that say you can if you do this and that, but we haven't yet been able to track down the actual bits of like IRS documentation that makes us sure that you can, right? And we wouldn't want to advise until we feel, that's in there, right? Just a couple of blogs or accounting organizations, websites are not sufficient for us to make that recommendation. So what I'm hoping, what we're hoping, and this is something Lauren and I have been talking about for a year maybe at this point, right? Um, and checking in with people on what they need is that it's a Slack channel. You ask questions, right? We try and tell you in as plain and simple English as possible what the rule is, right? And then you figure out if it applies to your situation, right? So it's not going to be professional, personalized advice for your situation, right? But what we will try to do is really clarify the rule in a very simple way, and you can know that, it's put together with good research behind it. So I'm hoping what we can do is we can share stuff like, some problems are just better with flowcharts, right? Um, do I fall into stream one or stream two? Do I fall into this subgroup or that subgroup? And then you make a decision about what is possible. Some things can be simple presentations, which I'm about to show you, right? Some things might be taking an excerpt from an IRS rule and sharing it in the group, saying in publication so and so, it says this, right? And we think that this is what you should be looking at. And then links to vetted sources. There's some great sources on YouTube. There's some really good, strong blogs out there. And what we're really hoping is that we can curate those and say, okay, are you curious about business travel? Here, watch this YouTube video from, this CPA who we think sort of nails the sort of key points and explains it well, right? So that's roughly how we're thinking of the pod, but clearly the point of this cohort is to define what's actually useful, what's of value, and how we go forward. Okay, just answering the question about travel. So that's a very frequent question, right? So think of it in three groups, okay? Is the travel fully for business, which then you don't have any problems whatsoever? Is it primarily for business or is it primarily personal? Yeah. And the rules don't clearly say what percentage of time you have to spend. But if you are not even spending 50% of your time on the business, then I think we can say it's primarily personal, right? If you're spending at least 75% of your time on the business, then, we're primarily in business. And then in that little gap, maybe is where, you can make a judgment of your own, right? Like, how important was this to my business? How much value did I get out of it, right? So these are the rules around this, right? If it's primarily for business, you cannot deduct the non-business portion of the trip. Yeah. So you see in this example, you go to Miami for 3 days, you spend an extra day at the beach, you can deduct your flight, you can deduct the 3 days of the conference hotel, right? But for that fourth day, you cannot deduct your hotel expenses, you cannot deduct your meal costs. Yeah. Now, if you flip it and you say it's primarily a personal trip, right? Let's say I flew out to San Francisco to, I don't know, see someone in concert, and I also happen to meet our colleagues there for a coffee, right? I can't suddenly write off the whole trip to San Francisco, right? But I can still write off the Uber I took to coffee. Yeah. Does that answer the question that we had earlier?
We got a yes in the chat. So yes.
Good. Yeah. Yeah, so I think this is the sort of thing. We had one more question about what was that about earlier that I said I would address later? One was about business travel.
I think that was the one.
There was one more, no?
There was one about receipts.
Yeah, we answered that
So we
already.
answered that one. But there is a new question in the chat. If your question is the one that Sakar is thinking of too, feel free to unmute or reshare. We have one from Leah.
Yeah.
Do you or someone you know have experience in filing taxes for US citizens with a foreign corporation?
Um, I don't. Not with a foreign, like not with a corporation. So you say you have a corporation that's registered outside the US?
Not yet. I live in Spain, but I'm a US citizen and I'm coming to a point where I really need to start thinking about doing something like an LLC.
Yeah.
And it seems like a real headache. So I'm looking for someone
Yeah.
to help.
I don't, I think this is a recorded session, but Lauren, maybe we can connect Leah with another of our C4G members who you might know who I'm talking about. That's also in a very similar situation to her.
Great.
Um, I had talked to someone else who's in a similar situation to you, and we looked at we did some background research for them, and our advice was that we found some firms that seem to specialize in this kind of Spain, US nomad stuff. Um, we just don't know all the obligations you have on the Spanish side, right?
Mhm.
And so finding a firm that does both sides of it is probably optimal, and that's what we ended up advising the other potential client. And we also sent her there, when we just Googled, we found some firms, and just based on their blogs and how they were writing things, we said these are not recommendations, but here are the people we thought were making some sense, and maybe you want to follow up with them,
Oh,
right?
that'd be great. Thanks.
But maybe she's
Great.
vetted someone, so you may not have to do as much vetting. Yeah.
Awesome. I appreciate it.
Yeah.
There's another question. When you say if you itemize, you can include
Yeah.
mortgage, et cetera. And so can you explain more about that? The if was in quotes, so I think the if is the question.
Yeah, sure. Um, so after 2017, the standard deduction was raised quite a bit, right? And there was a limit on how much of the local and state taxes you can deduct. So that was limited to $10,000. So it suddenly became more advantageous for large numbers of people to just take the standard deduction, right? So what I mean, if you itemize, is that when we look at all the kinds of expenses that you have, if we find that your itemized deduction would be greater than your standard deduction, then, we suggest you itemize, right? So, you know, these are the big ones. I mean, these two are the big ones in terms of itemizing, but you can also itemize medical expenses once they go over 7.5% of your AGI. So if your AGI was $100,000 and you spent 7,500 out of pocket on medical expenses, then you would be able to itemize to deduct zero. But if you spent 8,000, you would be able to deduct 500, right? So there are a number of things that are itemized deductions, and when we put those together, so charitable contributions, for example, so when we put those together, if we can get you a bigger deduction than your standard deduction, then obviously we suggest you itemize. Does that help answer your question?
Yes, thank you.
Yeah, I see. Okay. There was that question about the LLC and the S corp, right? So that's a very good question. And since we have so many S corps in the group, they may actually be able to answer it if anyone else wants to take a stab at it. But the short answer, right? Let me see if I can actually find my slides on this. Deductions. Right. Okay. So this is my everyone like Harry Potter? Anyone that hasn't watched Harry Potter at all? Because I'm gonna have to try and explain it in some other way, because this is just like my Harry Potter slide deck right here, right? So the first thing you see, I can't speak to legal issues, only tax issues, right? That there are all kinds of legal reasons to have other structurings, but don't sort of don't assume when I say there's no difference between a sole proprietorship and LLC. That's not true from a legal perspective, but it is true from a tax perspective. Okay. So yeah, so a sole proprietor, right? It's just you. If you need to hire, then you might need to get an EIN. Otherwise, you don't even have to do that, right? Yeah. Many people choose to have a doing business as name. So that allows you to bill and send receipts in another name than your name, right? Okay. Partnership, yeah, there's two of you. Many of you, you're working together. It's not that common nowadays. One of the places where we see partnerships is if it's a multi-member LLC, if multiple people own an LLC, right? This is a very common structure in the C4G group, obviously, is you are a single member LLC, right? So from a tax perspective, your tax return is just the same as your personal taxes. There's no difference between you and the business, really, okay? Now, when you get to this is the doing business's name. All right, this is the only non-Harry Potter slide. It's got 50 Cent on it. Um, now, the S Corp, right, is essentially the Voldemort solution, right? What you do is you split your business into two parts, into you and a separate business, right? And so where the savings come in is that you must draw a salary. If you draw a salary, you have to pay Social Security and Medicare tax, okay? But your company can give you something called distributions, right? And income tax remains the same, whether you draw a salary or distribution. But on the distribution, there's no Social Security taxes because the assumption is that, the immortal entity won't ever go claim Social Security benefits, doesn't need it. Yeah, right? So yeah, you have to, I don't know, split your soul. How do you do it? You have to do some kind of vile deed first to like generate enough magic to like you don't have to do any vile deeds though. It's a relatively simple, straightforward process to do this, right? Yeah, so this is the main savings. And earlier there was a question of when does it make sense, right? It can start to make sense when you have as much as 40 to $50,000 in profits, right? Not in revenue, but in profits. Once you deduct everything, it can start to make sense. But S Corp is a bit more involved. It takes a bit more work to navigate. And you probably, if you engage an accountant, it's going to be a bit more expensive than when you were doing LLC. So actually, in that 40-50 range, sometimes the actual savings, when you've looked at all the hassle, is not worth it, right? If you're a super optimizer, you're like, you know what, I want the 500 extra bucks and I'm willing to take the hassle, then it can be worth it. But once you get closer to 70, 75, $80,000 in profits, it becomes pretty clear that this is worth it, right? You do have to remember one thing, which is that there are certain jurisdictions, like New York City is one, that impose some additional taxes that also hit S corps. And so you just have to be sure to check that you're not in one of those jurisdictions, because then, many of the savings disappear even at the range I'm talking about, right? Then you would have to be even a little bit higher up before it starts to make sense.
That's great.
Hopefully that.
There are some folks, maybe more questions for the group than for you, Sakar, folks asking about bank recommendations. I know we've had a few threads on that in C4G. So if you have them, go ahead and throw those in the chat and I can pull those out as well. But with the time left, since we only have about 10 minutes here, I would love to have folks ask any questions that they have about the tax and accounting pod specifically. So we will only have 15 spots in this first round, this first pilot of the pod. It will go to, correct me if I have this date wrong, go until August 18th. Is that the correct date, Sakar?
Yeah, April. No, it should be yeah, April, May, June, July, August. Is that, are we going that far?
Well,
I'd
you'll have
have to.
about 6 months of access starting
That's
on
right. That's
February
right.
13th.
That's right.
So for folks who are interested, it's only $79 to have access to this for 6 months in this private Slack group. There's only 15 people to make sure for this pilot that Sakar and his team have enough resources to answer all the questions and focus on the folks that are in there. So I am going to put the link to register for that in the chat if you're interested in signing up for that. We'll share it to the rest of the community in about an hour after the session's done. So you can have first access to that before we share it more broadly, but wanted to give you all first access since you're attending here. But if you have any questions, would love to take some time to answer those as well.
Any questions? Will this chat be available later? There are a bunch of questions in here that I'm happy to answer, but I can just somehow, I don't know how, maybe I can respond to people.
Sure.
Yeah.
Yeah, I'm happy to pull those and I'll pull who asked the questions as well, or I can just kind of send the Q&A to the group in case other folks have the same questions.
Mm.
All right, if there's no questions about the pod itself, let's see, I just got one. Okay. Amelia asked, is there another slide on home office that Sakar hasn't shown yet?
Besides this one?
Probably this one.
Yeah. So, these are examples, actually, like I put this in here as examples of what we would send in the pod. Like if you said, hey, can I have a home office or not? Right. So one of the things that I frequently see, even other tax professionals advising, is that, oh, you need to have a door, you need to have a room. But actually, the IRS specifically says it did not need to be marked off by a permanent partition. It says that it has to be separately identifiable space, it has to be exclusive, and it has to meet these kind of admin tests or principal place of business tests, right? But they do not say it has to have a permanent partition. In fact, they explicitly say it doesn't need to have a permanent partition, right? So this is the kind of stuff I'm hoping we can distill, send it over, and then folks can make much better decisions in the pod.
That's great. And I see we have 2 registrants for it already, which is really exciting.
Yay!
Any other questions before we close out today? Whether about the pod or general accounting questions, these have been great. Can we share the slides, Sakar? It's a good question since I know that you have a lot of slides in here.
Yeah, I'm not totally sure. I'm happy to work on the slides a bit more and maybe then make them available. At the moment, they're for me to talk through. So,
But I will share the recording. So anything that you wanted to reference that was on a slide during the session, you can go ahead and grab those there.
Yeah, I saw a question. If anyone wants to reach out to me, it's this is my email. You can reach out to me. Yeah, and I really do think that particularly if you've been running for a little while and you are, a relatively contained business, solo run, I really think something like the pod is probably much better bang for your buck than actually coming to us for planning. If you are thinking of moving from an LLC to an S corp, when you have those set of inflection points in your business, that's when it might be worth making an investment in personal service. The other place where, sometimes I suggest it can be worth good value for you to get a professional is to set up your chart of accounts, right? Because if that setup is good, then a lot of stuff becomes easier. Yeah.
That's great. Well, thank you so much, Sakar. I know that even though we've been meeting and I've gone through several of your sessions, I always learn some things that I should be doing differently or look into. So that's fantastic. And thanks everybody for joining. Feel free to reach out with other questions about the pod, and excited to get those kicked off. If you've signed up for that, I'll invite you to the Slack channel on before February 14th when we'll officially kick that off. So thank you, everyone. Thanks, Sakar, and I'll see everyone soon. Bye, everyone.
Hey, guys, stay warm wherever you are.